The recent tax changes were rushed through Congress and the Senate. There was a minimum of debate and public oversight, so it's very hard to know the implications of these changes. The last thing you need is to spend time reading dense legislation, so that's been done for you and condensed and simplified into this ebook. This ebook debunks the myths surrounding the changes, laying out where the advantages and disadvantages are of the legislation, and what to do about it to get the best for you and your family. Income tax, corporate tax, benefits, and every other area of the new laws are all covered in clear, easy-to-understand language. The Tax Cut and Jobs Act is the most drastic change to the tax law in decades. What does it all mean? The current Tax Cut and Jobs Act, the TCJA, that was recently passed into law has been hotly debated, with various political and popular opinions dominating the media in 2016 and 17. Senator Mitch McConnell, the majority leader, heralded the tax bill was a sign that the government had heard middle-class Americans. However, despite the TCJA cutting tax rates for the majority of payers, the passing of the law has been a journey fraught with opposition. For some, there is a belief that the reform only benefits big corporations and the wealthy. For the majority, it is most likely the so-called complexity of the new regulations that is challenging. Nonetheless, supporters believe the bill will give the economy stimulus. The purpose of this book is to provide a how-to of the TCJA for people earning between $35,000 and $100,000 per year. The massive reform has been lauded as a response to the needs of middle America, but does not deliver. This book is divided into 9 sections to help you understand the 2018 tax reform. President Donald Trump got his first significant win as the President of the United States and leader of the Republican Party by signing a new tax bill into law. Trump coined it the Tax Cuts and Jobs Act, a euphemism for the good things he promises the bill will bring for America. In summary, the bill has sweeping reforms to the current tax systems, reducing the income rate tax, corporate rate taxes, as well as other significant reforms causing divides amongst many leaders in public and private sectors. The primary point of contention splitting the two parties revolves around whether the law cuts taxes for those that are already wealthy, even though all parties agree in public that they do not want to pass a bill that does exactly that. Critics argue that cuts to corporate taxes and reducing the top personal income tax rate from 39.6% to 33% will only favor persons already in the highest tax band ranges. The fairly strong rebuttal has been to deny such a view and argue that reductions would be felt at every tax band. The question appears to be how much will the cuts actually trickle down to benefit wider America. Vice President Mike Pence believes that the effect will be strong and apparent. The politician seemed to affirm that the law was a Christmas gift to all Americans, choosing to comment by quipping, "Merry Christmas, America." The tax deductions promoted here are technically true, but these assertions do not address the differences in reductions to people across bands, meaning that some people have bigger tax cuts than others. Let's evaluate some of the most drastic changes to the law that has just been repealed. Introduction to the tax rate reforms in terms of corporate tax. What is the law? A brief. Corporate taxes are taxes levied at corporations, as you might have guessed. Such tax can be payable to at the local, state, and federal levels of the United States. It is a fairly complicated system as each state can have a different tax rate. Iowa, Minnesota, and Alaska have tax on gross receipts over 9%, whereas in Texas and Nevada, such tax is absent. Nonetheless, it is the federal level that poses the most significant taxes on corporations. Corporate tax, flat rate. The corporate tax rate has been changed to a flat 21% starting January 1, 2018 after the passage of the TCJA, the old law. The repealed law works by specifying a specific payable amount for a corporation to pay within specific earning bands, with excess payments paid on the excess of the lower limit of that band. Essentially, tax bands work within your earnings category. Here is a table of a typical portion of the outgoing law, but it's still a good example. Using this table, one could calculate the standard corporate tax by using the band that a business falls in on the left-hand side of the table. Therefore, for example, if your business falls under the $75,000 to $100,000 marker, you would pay a rate of $13,750 as the standard tax plus a 34% tax on any amount above the lower end of the tax band, which is anything above $75,000. Back to our example, if you then had an income tax of $90,000, you would first pay the $13,750 and then calculate the excess. Excess would be calculated by deducting the $90,000 you earned from the lower end of the band, $75,000. $90,000 minus $75,000 equals $15,000. Then take 34% of $15,000, our excess, which is $5,100. Add the initial pay of $13,750 to the $5,100 of excess tax, and we have our total amount of $18,850. This means that if your business earned $90,000 in income under the old tax law, then you would pay $18,850 in taxes. Subscribe to our channel to stay tuned for next week's video, or check out our website at www.lensebooks.com.